Hi, everyone, and good morning, good afternoon, and good evening for people joining in from all across the world. Thank you for joining the webinar. I am Kainat, and on behalf of Team Nexus, I would like to welcome you all. This is our third Conversation with Nexus live webinar session that we are hosting, where we engage with rockstar entrepreneurs such as Rajeev today, who's joined in to come and share their thoughts and learnings with us, along with the live audience that we have. So I'm sure that all of us are looking forward to today's session. So without wasting any further time, I will be handing it over to Naren, who's hosting today's session. And I will request Naren to join in and welcome Rajeev as well. Over to you, Naren.
Thank you, Kainat. Thank you, Kainat. Rajeev, it's a real pleasure, real privilege to have you join us today and share your thoughts with our audience. People want to hear from you and not about you, so I will keep your introduction very, very short.
Great, perfect.
You started the company with Mukul and Anand and your brother, most importantly, 14 years ago. But let's kind of jump right into it. And today, the stock is up 30%. And it's up 200%, I guess, from the IPO price just a couple of months back. What's going on?
Yeah, well, first of all, let me just start by saying thanks for having me on. And you left yourself out. I think you've been working with us now for about 13 or so of those 14 years, and have been a terrific partner in what, as you know, many ups and downs. So thanks for all of the support along the way. So look, I think what you see is obviously it's our first earnings report, and so I think Wall Street is just getting to know us a little bit. We had obviously an opportunity to engage with investors in our roadshow in December, and now we've had our first public earnings announcements. And we had a really strong Q4. We grew revenue 64% year over year, so significant market share gain. And given the infrastructure driven nature of our business, we have a high flow through to profitability. So when we have really strong revenue, a lot of that excess revenue comes through to profitability. So I think you see investors, reacting very positively to that.
Rajeev, that's great. Thank you. I think it's a pretty remarkable company. So if I add the two numbers together, 48% margin, the total is over 100. I think I will call it a triple digit magic number. And people talk about, reaching the magic number of 40, but here you are crossing 100. What is the secret? And you said in your call yesterday that you've been profitable for 6 years in a row, cash flow positive for a number of years. What is the secret sauce here?
Yeah, I think it really starts with a mindset of figuring out how to do things profitably and taking a long-term view on how to build a good business. And there's obviously specific ingredients to us, but if I think about other entrepreneurs that might be listening, I think every company can find a way to be profitable on less money than it thinks. I think every company, probably needs less things than it thinks it needs. And hopefully 2020, was a good lesson for everybody in that, right? We all gave up things that we thought we needed and probably figured out new ways to do things. Now, as you point out, in our case, last year was our 8th consecutive year of adjusted EBITDA. And so it's not something that's new to us. But I think it starts with that mindset and really having a long-term view on how to build a good business. I think if we were short-term focused, we would look at growth at all costs. We would be willing to lose money. And, there were periods early on where we did have that mindset. And then, something interesting happened along the way, which is that VCs stopped funding ad tech companies, right? And so in some ways, we found the mindset not because we were so smart, but because we had no choice. We realized that we had to live on the money that we had. You helped us realize that. Our other investors helped us realize that as well. And I think that was a watershed moment. And I think, it's easy to get caught up in the hype of fundraising, right? You read headlines every day in the press this company raised money at this valuation, this company raised, so much money. But, not raising money is not sexy, right? Reporters don't write about companies that didn't raise money in the last 3 years. What they write about is the headlines of companies that did raise money. But I think actually fundraising is a lot easier than having profitable growth. And so I think it really comes down to having that mindset and saying, okay, how are we going to figure out how to do this? And, one example of this, we used to spend a lot of money on capital expenditure, buying, servers that would go into our data centers around the world. And, when the VC money kind of dried up, I had to tell the engineers, hey guys, there's no more money for servers. So we have to figure out how to do more with the servers that we have. And that, there was a lot of grumbling, I would say, for 3 to 6 months. Maybe people thought that if they grumbled, we would find more money for servers. But, it wasn't a joke. We didn't have any more money. So they figured out that, okay, it wasn't going to change. So if they wanted to do interesting things, they would have to free up hardware from servers that we already bought. And so that, that really created the mindset shift down at a tactical level within engineering. And that's been a real strength of our company ever since.
And Rajeev, you have continued to do most of the product development in India. What role does that play, and how has it worked out?
Yeah, I think it plays an important role for us particularly in our profitability, but even more so, I would say, in our agility and speed of innovation. So we knew even 15 years ago when we started the company that having engineering only in Silicon Valley was not going to work. I had started PubMatic coming from SAP, right, the German software company, obviously a very global company. It's headquartered in Germany, but has development centers in Palo Alto, in India, in China, in Europe, of course. And so competing, I think, with the likes of Google or, at that time, Yahoo, that's who we were competing with, 15 years ago. Competing for top talent was very difficult. And it's, of course, only gotten harder now. So we knew we needed another scalable another scalable solution. And so we decided on India. Now, where in India, that was another decision, right? I think the usual places are places, of course, like Bangalore or Hyderabad or maybe Gurgaon. But we found Mukul and Anand, our two co-founders, and they happened to live in Pune. They had been working at Veritas and then Symantec there. And they pitched Amar and I on having our development center in Pune. And, I had frankly never heard of Pune before. As a kid, I would travel to New Delhi every couple of years to visit with family. That's where most of my family in India is from. But, what we discovered in kind of looking at it is that, Pune is a great hub for education, a lot of universities, technology institutes. So there's a lot of talent. A lot of young talent means there's a lot of enthusiasm, a lot of fresh ideas, and quite high caliber of engineering talent available in Pune. And so I would say that has worked out great. We're a top employer for software engineers in Pune and able to attract a lot of great talent. I remember Mukul telling me early on when candidates would come in to interview and he would give them an offer, he would then have to meet their parents to convince them that, PubMatic is a good place for their kids to work. And so, we learned, how to recruit in that environment. And I think what we offer to engineers in Pune is an opportunity to work on problems at a scale that they've never seen before. We process almost 200 billion ad impressions per day, 2 petabytes of data per day are generated on our platform. And so that, is a scale that is really hard to find.
And Rajeev, you are, I think, one of the first companies out of India, software companies out of India, to go public in the US. How do you feel about that? Well, how did you decide to go public, and why did you decide to go public?
Yeah, so there was a couple of things that went into our decision to go public, and it really has to do with the fact that this is the next phase of growth for PubMatic. So the industry is consolidating. And we need to be in an opportunity to take advantage of that from an M&A perspective. And so that means more access to capital markets, right? Whether it's cash on our balance sheet, access to debt markets, currency with our stock to do acquisitions. So that was certainly one driver. Second, we got to a phase of our company where we're doing bigger deals with larger customers, right? Whether they're publishers, advertisers, and agencies. And so we work with, some of the largest companies in the world as our customers, like a Procter & Gamble or a WPP or an eBay as a publisher. And so by being public, we're more transparent. And I think that gives them more confidence to work with us, more confidence to build on top of our infrastructure. And that helps us attract more customers. And then, I think after 14 years, it was time to create some liquidity for our investors and for our employees. Many of them obviously have been working very hard for a long time, and they deserve some financial return for that. So these were all, some of the key ingredients. And then, of course, we had the timing of the pandemic that also led into the decision. And, I think one of the most important kind of takeaways from the pandemic is people have a lot more time on their hands, right? You're not commuting. You literally can wake up and brush your teeth and start working, right? So, the time from waking up to starting to work is 2 minutes. It probably used to be an hour and a half, for the average person to take a shower and get dressed and drive to work. So you have this time dividend, and you have to think about obviously how to use that time. And so I think, going public in this period has been a very efficient and great use of our time.
Yeah, maybe for the audience, I'll say that, feel free to post your question. There is a Q&A button below at the bottom of your screen. If you're using a laptop, and probably on the right, on the top, if you're using a iPad or something like that. So if you post your questions, I'm going to ask questions for the next 10 minutes or so, and then I'll take the questions for the audience. So feel free to post your questions, and we'll take them as they come in. So let me kind of shift the subject here. You talk a lot about open web, and you have promoted the importance of open web. Can you talk about what you mean by open web and why it is going to be playing an increasingly important role in how we consume information?
Yeah, absolutely. So, broadly speaking, I think there's two ways to divide the internet. One is the walled gardens, and then the other is the open web, right? And the walled gardens are, obviously companies that we know well and we all use in our day-to-day lives. Google, Facebook, those are the two largest. And then there's just a couple of others, like a Snapchat, for instance. And these are, they're considered walled gardens because you take content into their environment, and you can't take content out, right? So your data, it's very hard to remove it, whether you're a consumer and you want to remove, your posts or your social graph, or if you are a marketer or an advertiser and you want to, remove data about ad campaigns, what's working, who you're targeting. And then in contrast, we have the open web, right? And the open web is literally everything else, right? So it's everything that you access otherwise through your browser, through a mobile app or on your connected TV device that doesn't use this proprietary infrastructure that the walled garden players do, and instead rely on a interconnected set of standards, driven by the Interactive Advertising Bureau or the World Wide Web Consortium or IEEE or these other standards bodies for the internet. And I think what's important about the open web, and really why we exist, is that I don't think anybody wants their internet experience, trapped under the control of the walled gardens, right? It would be terrible if all we could do when we, wake up in the morning is have an internet experience that's dictated by, Google or Facebook. And not that, there's anything wrong with people at Google or Facebook, but, we don't want, 2 or 3 companies controlling the internet experience for everybody. You can look at, a company or a country like China to see what that existence might look like. And so having a thriving open web, I think, is critically important. And so what PubMatic does is, we help the publishers, the content creators on the open web, have a more profitable advertising business so that they can reinvest back into the journalism, the entertainment, the content that we all love. And the big opportunity on the open web is that the quality of content is much better. So if you think about, professionally created entertainment, movies and streaming content or journalism, that all really exists in the open web. And so that's why it's so important, I think, that we have a healthy and successful open web that we can all get insight, information, and data from.
So you mean something like Washington Post or New York Times or Times of India, you will call that as a professional content in the open web?
Yeah, that's exactly right. And advertisers have shown, certainly consumers have shown they prefer that kind of content, right? And I think we just have to look at, the truth wars or the fact wars over the last few years, to be reminded of that, the value of journalism and professionally created content. And advertisers also, prefer this kind of content, right? When they put their ads next to a piece of content, they want to make sure that that content is accurate, is not, polemical in nature, is not polarizing, right? And so that's really what the open web provides in contrast to the user-generated content, that largely characterizes the walled gardens, right? Whether that's, posts on Facebook or, videos on YouTube.
So I'm going to take a question from Arunima Patel on the line, and she said the tech space looks crowded now. Is there room for new entrepreneurs, specifically those who want to do this thing on a shoestring budget, or is this becoming a game for the big companies only?
Yeah. So look, I think the tech space, you could say on the one hand, is crowded in that there's, thousands, tens of thousands, hundreds of thousands maybe of tech companies out there. But I would say on the other hand, the opportunity on the internet and in technology generally is much bigger than we thought a year ago, right? And that also factors into why we decided to go public. People obviously have a lot more time, right? They're not commuting, they're not going out to restaurants, they're not going out to live events, things like that. And people are engaging in use cases on the internet that they never thought they would before, right? So things like taking a fitness class, right? I think a year ago, if you surveyed people, they would say, well, we go to the gym for that, right? The vast majority of people. Now, of course, that's all online. Buying cars has now moved online, right? People are buying $30,000, $50,000, $100,000 car. They're doing that online. So, all of these use cases have moved online. So I think the internet economy and technology more broadly is going to be, significantly bigger than any of the projections show. Now, the second part of that question is around the shoestring budget. And that can be difficult if you're in a crowded segment, right? Because then what can happen is that you have a well-funded competitor, and that competitor is going to make a lot of noise from a marketing perspective. They're going to gobble up a lot of market share. And even though you may be running, a well-disciplined, profitable business, it may be, at risk of falling behind. And so there, I think what you have to do is try to find areas that are not perceived to be, super exciting. And I'll give you an example of that. When we were first fundraising for PubMatic, I think probably the first 20 VCs, they said no. And I didn't get discouraged by that. Actually, I was excited by that, right? Because that meant that we weren't going to have 50 competitors, piling into the space if I saw an opportunity that the venture capitalists couldn't see. So, that obviously has worked out very well for us.
Well, that's a good point you make, is don't use venture capitalists' acceptance of your idea as an endorsement of it's a good idea, because, a lot of the venture capitalists are looking at the past, not what might be happening in the future. So
yeah, agreed. I mean, I think, you got to be a good pattern recognition, and that means typically looking to the past, right? And there's not, it's I would say a minority of VCs that have, vision and are forward looking.
Another question here from Rajesh Solanki. His question is, you talked about going through a number of changes along the way, ups and downs in the company. So how long did it take you, or what did it take to find that right product market fit? And what was the reason for some of the pivots?
Yeah, absolutely. Product market fit does take time. And I think the most important lesson in all of that is to get your product in the hands of customers and get their feedback. And I remind my team of that all the time, which is, we can convince ourselves sitting around a table, inside a PubMatic conference room of anything we want to believe in terms of the product features or the capabilities or, what customers are looking for. But as soon as you get it into the hands of a customer, right, it's very different. And so a couple of examples of that, something I think we did wrong. We spent about a year building the very first version of PubMatic. Now, this is going back to 2006, 2007. There was nothing like PubMatic in the market. So a very, disruptive idea. And we thought, okay, we've got to spend a lot of time to get this to a mature level of product. So we spent about a year before we shipped the first version. And we launched at a TechCrunch conference. And overnight, we had about 2,000 publishers sign up for the product. So we knew right away that, the problem we were trying to solve obviously struck a chord, and there was a big need around the problem. And I spent the next month or so, just interviewing these customers that signed up and, spending a half hour, 45 minutes with them on the phone and just saying, hey, how are you using the product? What's working well? What's not? And we learned a ton in that process, right? And so in hindsight, I think we should have shipped whatever we had after 3 months or 6 months. And we probably would have saved, a lot of time in that process. I think another, example of a pivot, and you might remember this, Naren, but I remember I presented some slides showing that we needed to focus on the long tail of publishers, right? That, because of, going back again 15 years, Google was ramping, right, as the kind of the primary search engine. Because search, was ramping up, it meant people could find content in the long tail of the internet that otherwise they would never find, through a portal. And so we felt like, hey, the growth in the next decade is going to be on the long tail of the internet. And so let's build our product, for that long tail. And it turns out that that's wrong. So even though, there's growth of consumption on the long tail of internet, there's not growth of ad dollars on the long tail. So advertisers don't want to put their big budgets, on unknown sites. So the vast majority of, in particular, brand ad budgets, from the Fortune 1000, marketers, those are going to the top sites, right? A New York Times or a Wall Street Journal or Economic Times, et cetera. And so we had to change, our approach a couple of years in to focus on that. So, the lessons learned there are, I think, two. One is, keep iterating with customers. And the other is be open to change. If you kind of have wishful thinking and bury your head in the sand in the face of, facts that are coming at you, then, that's when bad mistakes can happen.
Rajeev, maybe I'll also ask you a question that has really impacted our business and really in a way helped us long-term, but short-term was a pretty big scare. The whole idea of cookies going away. And I know 3-4 years ago, I worried about a lot that what's that going to mean for our business. How did you kind of see it at that time, and what was sort of your response and approach to addressing the cookie?
Yeah, look, I think every major technology transition is both an opportunity and a challenge. And this, I think, is a classic example of how do you look at it, right? And I was fortunate to be at a dinner, this is maybe 5-6 years ago, with John Chambers, right, who was, of course, the legendary CEO of Cisco. And the one thing I took away from that dinner is somebody asked him, what was the secret to your, whatever it was, 20-25 years of success, running Cisco. And he said that, what he spent significant time on was identifying the big technology transitions that would come every, 2 to 5 years, and making sure they were better prepared than their competitors for those transitions. And that if you do that, then you can capture a lot of market share when those transitions hit, because your competitors are, focused on yesterday's problem, not, tomorrow's opportunity. And so I really look at identity through exactly that lens, right? There's a huge shift that's happening, which is that anonymous tracking is going away. These are things like the third-party cookie or the ID for advertising or IDFA in the Apple environment. And instead, they're going to be replaced with known profiling of users where the consumer can opt in and has, a voice in that decision. And that's the big shift. Now, the good news is that the shift itself, while it may be painful, when we come out the other end, when you know exactly who the user is, right? If we know that it's Naren or we know that it's Rajeev, then we can deliver a much more targeted ad. And that means the advertiser is willing to pay more. And so the publisher will generate more revenue. So obviously the trick is, how do you get from point A to point B? And so we've made this a real investment focus for us. And we've just said, we need to lead the industry in this arena. And whenever any of our customers or partners or prospects thinks about how to solve this problem or wants to run a proof of concept or a pilot, we want them to think first about us and do that with us. And if we can do that, then we'll be in that leadership position and we'll be able to use that to drive market share gains. And so that's exactly what we're going to try to do. I think if we talk again in a year, 18 months, you can ask me how that's gone.
So I think I've heard around PubMatic when I go there that as a consumer, a ad relevant to me is information, ad not relevant to me is spam. So with the and you talk about the identity solution that you have, you are telling me I'm going to get less spam and more information through the advertisements.
Exactly. I mean, the reality is, ads are not going to go away because consumers like the trade-off of free content, for ads, right? And, that's been around now for, I think, over 100 years. And, obviously there's a pandemic and, many economies around the world are shrinking. And so, people's, budgets and household finances are not in great shape. And so I don't think they're all of a sudden going to start spending, money when they haven't for many years on content. So you're going to see ads. And so the question is, should those ads be kind of useless and annoying, or should they be, relevant? And of course, the best ad is like content, right? So you may be looking for, for a car or for, something to upgrade your home office. And if you get, the right product, then it's great, right? It's as good as, reading a review or an article about that product. So I think consumers will go for, if it's done properly, right, and their privacy is respected, I think they will go for the more targeted and more relevant ads. And maybe there can even be less of those, right? We know from the data that a relevant ad is worth about 3x to an advertiser as a less relevant ad, right? Meaning the ROI that the advertiser gets is 3x, and so they're willing to spend 3x on putting that ad in front of you. So if somebody came to you with a trade-off and said, "Hey, I'll give you more relevant ads, but you'll see half as many," I think many consumers would opt for that.
I think all consumers will opt for that because I see, information. And I personally have been introduced to a number of products that I ultimately ended up buying through some random ad I saw somewhere on a billboard or TV or whatever. So I think the relevant ads truly are information, or at least stoke your memory about something you may not have thought about.
Yeah, that's right.
So there's a question from Sumi Jain, and his question is, what would you have done differently to shorten the product market fit? You talked about introducing product early and getting feedback. What else could you have done? As well as what else could you have done to scale the company earlier and go public sooner?
Yeah, look, I think from a product market fit perspective, it's really about fast iterations with customers. I think that's maybe the number one most important thing. And then I think the number two is to make sure you have really good product managers who know the domain and who are great at listening. We made a change in our product management organization about 5 years ago, where we moved to having all senior product managers. So meaning people with really only 7, 8 or more years of experience. And of course, we pay more for talent at that level of seniority. But we've just found that, with the leverage that we gain, it makes a huge difference, right? One product manager is going to, kind of tie up and control what maybe a dozen engineers are working on, week in and week out, right? And so if you can make sure you're working on the right problems, then you'll get a lot more leverage from that engineering organization.
There's a question from Ashok here, which says you became profitable because there was no money or there's no VC money. No, I guess the question, I'm going to summarize it here, is that if you have plenty of VC money, why become profitable?
Yeah, look, I think there are times when going for growth makes sense. I think what can often happen to a company is they get used to a certain set of metrics that define success, and they fail to adjust in the next phase of the company's life, right? And so, early on, for instance, you might be very focused on, signing up customers and gaining product market fit. So you may give away the product, right? You might say, okay, we're not going to charge for it. We just want people to use it and to try it out. And now you start to set goals every quarter, every year about, okay, how many more customers can we can we acquire? And then somebody says, well, hey, maybe we should charge for the product. And then somebody says, well, if we charge for it, the pace of customer adoption will slow. So we shouldn't charge for it, right? And so that's an example of where, you keep using the metrics from the last phase of the company's existence, to measure the next phase. Now, obviously, that company has to generate revenue at some point in time. And so, you have to shift, and you have to have a defined vision to say, hey, those old metrics, those are no longer the relevant metrics. We're going to shift to the new set of metrics. And then maybe it might be about revenue growth for some period of time. But eventually, to make it into the public markets, you'll have to show how you can generate profitability. And the problem with leaving it always to tomorrow is that, and we've all seen this in the markets, one day you'll wake up and the markets will say, it's a profits today kind of market, not a profits tomorrow, right? And that could be changes in interest rates, changes in inflation, some shock that people won't see coming. And when that happens, if you haven't already moved ahead of that, then you're 18 months behind the curve, right? Because that's how long it can take. So I think you have to be very thoughtful about what's the right metric for the current and the next phase, and make sure that you're shifting yourself through those metrics, whether it's, what you publish internally in your dashboards, what you compensate people on, how you measure the organization's success. So you've got to keep that front and center.
And I think, Rajeev, you have said that also, that you train the customer to expect the product to be free. It's hard to change their expectations.
Yeah, that's exactly right. I mean, who wants to pay for something all of a sudden when they've been getting it, for free for years? And so I think you have to be, really careful about setting that expectation. And, look, we all know there's good customers and bad customers, right? And the bad customers are the ones that, want it for free or a reduced rate, and then they want all the bells and whistles in terms of service and innovation and features. And so you're not doing yourself any favors, I think, to give them all of that, when in reality, what you want to do is, price it commensurate with the value that customer is getting.
So there's a question from Gajendra Nagpal, and it relates to maybe his question. If the market is large enough and also growing, there is room for more than a handful of players. How can you address the question by VCs on how you are creating a differentiator? And maybe same thing applies to public markets as well.
Yeah, that's right. And look, I think if you look at most industries, right, it's not one company runs it, right? Of course, there are, some examples of that, like search, with Google, one company obviously dominates, but the vast majority of industries are organized around, different segments, subsegments, and, at the top, there's usually a handful of companies. So I think the first thing to do is to really push yourself on, is this a winner take all industry or is it not? In our case for PubMatic, I don't see it as a winner take all industry, because the way the technology works and the way the marketer supply chains work, big advertisers, they want to have multiple platforms like we do that they work with. They don't want 100, but they also don't want one, because it's too big of a supply chain risk. And publishers also want to have multiple sell-side platforms that they work with, because of the way the header bidding technology works. So we are not in a market where it's a winner take all. Now, there will be a handful of winners. And so now we have to define, why will we be a winner? And I think here you have to think about it either in terms of the strengths that you have that will allow you to be, unique and differentiated. or a segment of the market that has a particular set of needs that you are particularly good at catering to. So a good example, I think that is easy for people to understand, is you could look at stock exchanges, stock markets, right? And just pick any one country. You could pick India, you could pick, let's say US. And you could argue that logically speaking, it would make sense for there to be only one stock market, right? Where all buyers and sellers interact. That would be the most liquid market. And it should be the most efficient. It should be, the fastest, et cetera. But the world is such that different markets, different exchanges, they have different things that they're really good at, right? So some markets are good at opacity. So if you want to sell or buy a lot of stock and you don't want your competitors to know what you're up to, then there's one exchange that's really good at that. If you want the fastest execution, there's one exchange that's really good at that. If you want the best price, there's one exchange that's really good at that. And so that, creates a market where there's a segmentation of needs, and any given customer might, have different needs across those different characteristics. And so I think that's a way you can think about, how do you articulate to a VC why you can be successful in a particular, subsegment of the market.
So basically the message is, go after a segment that you can win in or you can dominate. The segment can be small early on and you can grow from there.
Yeah, absolutely.
You got to own something.
Yeah, you got to own something, and you don't have to own it all on day one. And you can have a path, to go from one segment to multiple.
So there's a kind of interesting question from Shritan Thakur, who's saying that when organizations spend a lot of money on advertising, somebody has to pay for it, and they have to charge a higher price for the product. How do we as a society? That's part I'll add. How do the society we justify that?
Yeah, well, look, nobody forces the consumer to buy the product, right? So, other than taxes, you have choice. You can buy the product or not buy the product. So, if we take an example of, Procter and Gamble, right? Two different types of disinfecting wipes. Procter and Gamble has a premium product, and then maybe Unilever or somebody else has more of a mass market commodity product. And I think in every market, there are people who are willing to pay a premium for features that, that resonate with them. And it could be that, okay, one disinfectant wipe is 99.9% effective and one's 99.99%, right? And so most people will say 99.9 is fine, and some people want that extra level of protection. So I think it's up for the marketer to decide how do they go about acquiring that customer, and the customer is free to say that value proposition doesn't make sense. The cost of marketing is not something I'm willing to bear, and so I'm not going to pay the premium for this product, and I'd rather go with the mass market product. And the good news is that I think there's choice, and the market sorts this out day in and day out, right? I mean, if you look at something like a chicken sandwich, you can find a chicken sandwich for $3, you can find a chicken sandwich for $30, and both can be profitable and good businesses.
And they both have great markets. They both have good markets.
That's right. They both have plenty of scale, and they're both good markets. And customers probably appreciate the choice, and the suppliers probably appreciate that they have that option too.
So we have a number of people on the call who are in the earlier stage of their journey, and Sri Nivasakila is asking this question. What is your experience? What were the lessons learned in your acquiring the first 10 customers?
Yeah, I think
are they still relevant at this stage of the company? The lessons you learned.
Yeah, so I think back to that when we did our initial launch at that TechCrunch conference. I think we have one or two of those customers still today, and in fact. One of those customers is our largest customer today, and generates, some over 20 million of revenue for us annually. So obviously that's been a very good relationship, and that customer has changed hands over the years. It was AOL, and then Yahoo, and now Verizon Media. So that's obviously been a very fruitful customer relationship. So I think the most important thing to think about with those initial customers is, what do you want to get out of you as the technology provider? What do you want to get out of those customer relationships, right? And for us, it was about learning how to make the product better, learning how these customers would use the product, learning about what are the value props and the features that resonated versus what didn't. That was much more important to us than trying to hold on to those customers. Right. And you may have a different set of customers down the road where you want to do pricing discovery with those customers. Right. And so, you have to really think about what's useful with this particular set of initial customers. There's always more customers to be found. Right. Pretty much every market that anybody here I think is going after is going to be a large and deep market. So I think just be purposeful about, what are those value propositions. And just an interesting story on that. We about 2 years ago, somebody fished out a publisher pitch deck, a sales deck from our first year of existence, maybe our second year of existence. It was, in the back of some cabinet somewhere. And I started flipping through the deck, and I realized that, 12 years on at that point, I could still sell with that same deck. The technology has obviously changed massively. The scale of what we're trying to do is very different. How we do what we do is different, but the core problems that we were trying to solve, how to help publishers generate more revenue and how to help them better control the quality of ads that show up for their consumers, those things, they haven't changed in 14 years. And I think in thinking about that, what I realized is, that's a good sign of a durable business, right? If you think about, the most durable businesses out there, maybe somebody like a Google, for instance, the core problem that they're trying to solve, which is helping you find information, that hasn't changed, even though many aspects of their business has changed.
So the needs don't change, but the way you serve those needs or the way those needs can be served evolves over time as time goes on.
Yeah, absolutely. I think in durable businesses, the core needs, they don't change, right? The core needs of your customers. But of course, how you solve them and the products, the technology, the way you solve them, that absolutely is changing.
So Rajeev, one thing maybe I can talk about, you talk about innovation, and my own experience working with you is we have canceled more projects at PubMatic than we have in play right now. You've been very good at cutting things off when they're not working out. Can you share your thoughts? How do you get the organizations to come along with you when you're canceling a project that they have worked on?
Yeah, I think it starts with the culture of the company and how you define success. And so one of the important lessons that I've learned is that it's very important to define success for every individual at the company really as the company's success, not their own agenda for what success is. And so we talk about internally that the most opportunities for the most number of people internally at PubMatic will come from the company's success, right? If we're successful as a company, that means we're growing, we're hiring new people, team sizes are going to be scaling up. We're going to have to use new technology, right, to scale up to, more and more volumes, right? There's going to be, very interesting problems to solve. And that really is what will drive success for the company, for the individual. And so you have to define it as really a growing the pie kind of view of success, as opposed to a win or lose, right? Your loss is my win, or my win is your loss type of approach. And so I think once you do that, then you have an opportunity really to put an end to projects that aren't working well. And you can say, hey, look, we learned about this thing. People did good work, they did their best effort, and if it's not working, why should we keep pounding our head against the wall? Let's cut that initiative off, and we'll move the people to a different initiative, right? And of course, those people who are not being successful, they're first, they know the best that this thing is not working, and they probably want to move on to other projects. So, but I think having that shared vision and definition of success is really important. So we had an acquisition that we did maybe 5 or 6 years ago it didn't work out well in terms of the market opportunity around what we had acquired. And we had a team of about 18 people in the engineering department that were working on that technology. And so we said, okay, you know what, we're going to shut it down. We had 40 other engineering openings, and so we just moved the other 18 people, into those, 40 of those slots, some of those slots, and that worked out very well, right? The hiring managers were happy; they were able to find 18 people overnight that otherwise would have taken months to recruit, and those people were excited now to be working on winning projects. So I think you have to go into it with a mindset of, what is the definition of success? And it's not keeping losing projects going, longer than they need to. It's, putting people on the best use of their time.
And I think, Rajeev, how do you get around that thinking that I have spent millions of dollars coming up to this point? If I spend $1 million more, maybe I can make it a success, even though it's a failure right now. How do you get around that?
Yeah, I've been teaching my kids a lot about the fallacy of, the sunk cost and the marginal cost, right? So once you put that 2 million in, it's irrelevant, right? You have a decision to make today about what do I do about the future. And that 2 million that you've already put in is of zero help. And so you have to just be, I think, very objective about that kind of thinking and say, you know what, the worst thing to lose the 2 million is to lose another million on top of the two that you've already lost, right? And so just forget about the 2 million and just say, knowing everything that I know, would I put another million behind this thing or not? And if you simplify the question to that, then very quickly you get to no, I don't want to put another million into it. And so now you have your answer. And I think once you have the answer, the other thing that I think people sometimes make a mistake around is, they kind of dally in making and executing the decision, right? It's like, okay, we know we're going to shut it down, but why don't we wait till the end of the quarter or maybe the end of the year? And, we can, kind of do it in a quiet way. And I think that's, a lot of nonsense, right? Once you know that you're going to do something, the best thing you can do is, do it immediately, right? Because you want to free up those resources, you want to free up that time. And I think the rest of the organization will thank you, for moving quickly.
That's very, very good insight, Rajeev. I think that's the key to success is you're going to be bold. You got to be able to take a step back if things are not working out. Don't throw good money after bad, is what you're saying.
Yeah, absolutely.
Good money after bad. So we have a question from Manish Kejripal. He's saying, you were private for a long time, had different kinds of investors, angels plus VCs. What investor advice help that you and other founders really value in the journey of PubMatic?
Yeah, I think one of the things that we've been very careful of at PubMatic is we picked, I would say, the investor person over the investor firm, right? And so what I mean by that is oftentimes, you're fundraising and maybe you're fortunate to have a couple of offers to consider. And people look at it as, okay, do I want to work with this firm or do I want to work with that firm, right? And I think actually the decision you're making is about, do I want to work with this partner who happens to be at a particular firm versus another partner at a different firm. And so we were very intentional about, whose money we took in the sense of, who did we want to work with and who did we want to have on our board. And I think we ended up being fortunate to think that way because, we were private longer than we had intended to be, right? So, we're working with these people, Naren and all of our other great investors and board members, as a private company for, probably longer than we all anticipated. And so the way we built our board, we have entrepreneurs like Naren who have, built and launched companies, taken them public. And then we have financial oriented folks. So we have, former, public company CFO, and, he brings a very different kind of lens. And then we have, some people who have been in operating roles at other companies. So they bring a different lens. But I think in all of it, I've tried to think about, what does the individual bring more so than the firm or the company, the venture capital firm that they work for, and be very intentional in terms of our board building decisions that way.
And I think I would say, you are tested, all of us are tested when things are either going very poorly or very well. And, I think you have to test your investors, your partners also in those times. Everybody is happy when things are going great, but what do they do when things are not going well? Are they going to give you honest advice and feedback and really watch out for the interests of the company? That's really what is important. Rajeev, maybe.
So just, Naren, just to build on your last comment, sorry to interrupt you. I think that's a key point, and that's why, again, the individual matters, right? Because when things are not going well, and maybe you need to take some inside money, or you need to, restructure certain things, there's no venture firm that is going to care, right? It's going to be the individual, the partner that you're working with, who's worked, with the entrepreneur for a number of years. And that individual is going to make a decision to say, hey, do we continue to back this portfolio company or do we not? And so that's why I think the mindset, the integrity, the perspective of that individual is so important. Okay, sorry, back over to you.
Yeah, no, thanks. It's a great comment. So a lot of ads. It's a question from Rahul Sarogi. His question is: there are many ad tech companies looking to grow or increase efforts towards CTV, connected TV. While the studies are showing that an average consumer has spent much more time in mobile screen than any other device. How do you kind of, is that the right investment? Is it the right investment in connected TV when people are spending more time on their phones?
Yeah, it's a timely question because, we just in the midst of our earnings, which we announced yesterday. And so we're getting a lot of investor questions around, in particular, our strategy for CTV, which is obviously a very hot and emerging area. So I think the bull case on CTV is that, consumers are shifting their time towards streaming content. And that streaming content, by the way, in US and Europe tends to be viewed on connected TV devices. In Asia, it tends to be viewed on a mobile app device, right? It just happens to be, the screen that consumers have in each region. But the consumers are spending more time. They're obviously cord cutting from cable TV, and they're spending more time consuming this streaming content, and the ad dollars have not kept up, right? And so the last, let's say, big pool of ad dollars that are going to move from analog to digital really is TV budgets, right? And so, people are eyeing these big budgets that are going to move over the next, 2 to 10 years and saying, okay, how do we get a piece of that? Now, to the point of the question, actually, there are bigger markets out there. So short form digital video, watching a 2-minute sports highlight or news clip and the, 15-second ad that maybe appears at the front of that, or just mobile, all types of ads, display or video ads on mobile devices. These are, in fact, significantly bigger markets. And so, we have gone to pains when we communicate with investors to do some education around that and say, hey, look, we understand everybody's, very interested in CTV, but don't overlook these other markets that are quite big and that are growing, just as fast, if not faster than CTV. So I think you're right the questioner is right to look past the hype. And I think that's also a key lesson for entrepreneurs is, what's in fashion can change very quickly, right? And so don't let the financial people, tell you what you should focus on. Focus on, where you think there's good long-term opportunity, and try to build a good business in that segment. And if you do that, you'll be successful. Now, it might be harder to fundraise, right? Because all VCs want to think about in terms of digital advertising these days is around CTV. But you'll find an investor out there who will play the long-term game, and that's probably the right investor for you.
So Rajeev, you talk a lot about automation and data, and you have said yes. You say frequently that's your competitive advantage. How do you kind of, is that apply across the board? Is that where we are going?
Yeah, I think it absolutely applies across the board, and the reason is kind of twofold. One is, as we talked about from the outset, as more and more things move digital, that means they leave a trail of data behind them, right? And that trail of data is something that can be measured and can be optimized. So I think number one, we see that the shift towards digital means you can optimize a lot of different things that previously were not optimized, right? And so that's just a huge opportunity, and that's a rising tide for everybody, right? Optimization can mean, saving time on things, spending less money, getting more optimal outcomes. I mean, those are the types of things that can move humanity and society forward. And then automation, I think, is particularly important because it frees people up to do more value add things. Right now, there's always, I think, a fear of automation, as in, hey, will my job be automated away? And that, I think, is a real, can be a real concern and a real risk. But I would say, look at the flip side of it, right? Which is, let's say, as an employee inside of a company, do you want to have the kind of job where every day you come in and you do the same thing over and over again, right? Processing some report, shifting data from a spreadsheet into a PowerPoint presentation, that's I think a terrible way to spend your time. You'd rather automate all of those things so that you can spend your time interacting with customers, thinking about problems to solve, thinking about new ways to solve those problems, right? So these are, I think, the far more interesting things. And by the way, these are the much more value add things, right? The wage you can pay somebody who is innovative and creative in solving problems is much higher, than somebody who's, transferring data from a spreadsheet to a PowerPoint, right? And so that's a much better job for that employee. So I think automation is very important in terms of employee satisfaction and employee well-being.
And wouldn't you say that CTV business is interesting, because a lot of the ad business in CTV has been pretty manual? And I think some of the excitement is coming from the fact that the nature of that business is going to change. It's going to become, and you talked about that, become more automated, more programmatic, and so on.
Yeah, that's exactly right. I mean, I think, if you watch, a good example is just watch the evening news, right, in whatever country you're in, and the 6 p.m. or whatever, 5 p.m. news, and count how many ads are irrelevant for you, right? And I would bet you that 90% of the ads are irrelevant. So when I watch the evening news, and I didn't used to pre-pandemic, but now I'm home all the time, so we watch the evening news. 90% of the ads are either for pharmaceuticals or for pet care. And I don't consume most pharmaceuticals, right? I'm not yet in that age bracket where I need to be. I'm sure at some point I will be. And we don't have any pets. So these marketers are wasting, huge amounts of money. And it's also, frankly, an annoyance. So I'd much rather have, an ad for a product that I'm interested in. So I think, to your point, the TV market, has been obviously, analog, manual for almost all of its existence. And this is one of the big opportunities to optimize it is, I should get a different ad on my TV than my neighbor gets. My neighbor has a dog, so he probably appreciate, great dog food ad. But, the entire block, maybe even the entire zip code, gets the same ad today. And so that's a huge opportunity to optimize.
Rajeev, I'm going to shift gear a little bit here. And, you started the company with your brother, your older brother. What are kind of the good, the bad, the ugly? When did you ever get to blows with him?
This is, I think, our second, maybe third company working together. And I would say both of us have matured over the years. So in our first company, an e-commerce company, which was, we started in college. And so we, started working on it full-time after college. Our business disagreements would, pretty quickly devolve into, shouting matches. And, somebody would say, well, when you were 12, you did this to me, or, you did that to me. But now that, we've gotten a little bit older, a little bit wiser, he also moved to India, for, I think, almost 10 years, 8 to 10 years, something like that. And so I think we found that we worked best together when we were on opposite ends of the globe, literally. I'm in Silicon Valley and he was in Bombay. And, that forced us, I think, to be, much more focused in our communication, right? Because the beautiful thing about companies that have base in India and base in California is whenever you're on a conversation, both people are annoyed with the time zone, right? It's always late for somebody and early for the other person. So that, that forces you to be very succinct and, get what you need done in 30 minutes. And, now he's moved back to the US. And so we work together a lot at PubMatic. And I think that's, with time and I guess distance, that's working out very well. And I think one of the keys is that, we have very clear and kind of delineated areas that we focus on, and, we'll help each other if needed. But otherwise, I think the roles and responsibilities are very clear for us and, for everybody at the company, which I think is also very important.
Rajeev, your wife is also a very accomplished person, Ruchi. How much advice do you get from her? Or she decides to not give you any advice?
Yeah, well, she is very accomplished. Thank you for recognizing her. Went to Wharton for her MBA and worked in investment banking for many years. So no, I do get advice. I would say the advice is less on the business front and more on the perspective and going through life front. I'm a very competitive person. And I like to win. I like to win all the time. And of course, life is not such that you are winning all the time. There's always, things that are working well and things that are not working well. And so, one of her best pieces of advice is that it can always be worse, right? So even when I think things are not going well, her advice is always, you might think it's going badly, but it can be worse. And so that's, I think, a good perspective to have to kind of, calm down and regroup and think about the right path forward.
Did she ever tell you that, you have done the wrong thing by starting the company and it hasn't gone public for 10 years or whatever?
No, I think, she's been frankly amazed at what we have achieved, right? And so, you can put that in the column of things can always be worse, right? That obviously we've achieved a great deal. We were, of course, private longer than I think most companies that eventually go public, are private. But we're very grateful and fortunate, to be in the position that we're in. I don't think I would change, if I could, I don't think I would go back and, change anything in terms of the pace or the outcomes. Of course, there's, things I would do differently from my learnings. But no, she's always been in the other camp, I would say, which is, the company has great potential and great capability. And so hang in there and, the day will come when things break your way.
I think, Rajeev, from what I've seen the data recently is that the companies today take, an average of more than 10 years to go public. A lot of companies get acquired along the way and so on, and some go faster, of course. Because I think if you're going to build a durable company of size and scale, it is going to take time. So I think, but the beauty is that, from what I understand now, that we have created, tens, maybe 50s of millionaires and tens of deca-millionaires. And I think we all have to be pretty proud of, what we have done for people, around us.
Yeah, I think you're absolutely right. And, one kind of story anecdote from the IPO, as we were in the IPO process and, going through the cap table, I could see, all of the individual shareholders, right? And so, of course, there's, investors and founders and whatnot. And then we have, a lot of employees, right? So we've been around 14 years. So we have employees that, maybe worked at PubMatic for 2 years or 4 years or 5 years. And they might own, a couple hundred shares, couple thousand, maybe some tens of thousands of shares. And so I was going through this cap table. We needed to find, contact info for some people that we had lost touch with. And it was amazing to see, some account manager or director of sales that, I hadn't worked with in 10 years. And, probably I had forgotten their name. Now I come across their name and I can see, okay, this person owns X number of shares. And they've probably forgotten, right, that when they left PubMatic, they exercised their options. They wrote a check for, $500 or $5,000 many years ago. And now they're going to get an email that says, hey, did you know, you own X thousand shares of PubMatic? And then they're going to do the math and they're going to discover that, it's worth a hell of a lot more than they had probably ever anticipated. And so that definitely brought a smile to my face that, all of these people that, they put in the work, they put in the effort. And so they earned every dollar of whatever's coming their way, that, we will have, changed their lives in some way.
Well, that's good. I think we have to have a joint, shared success. So that's very important as well. So a question from Samit Malhotra. Do you see increased competition in the space where platforms have capability to offer ad personalization at scale directly to end consumer? Would these platforms become the leaders in ad tech world?
So I think, the platforms that do this today are, of course, the walled gardens, right? So Google and Facebook, right? Where we log in, to Google Maps or Gmail or into our Facebook account. And so they know exactly who we are. Now, the problem that I highlighted earlier is that they have a lot of user-generated content, and advertisers, they don't like that. They don't like that content, right? Because it's, you remember the YouTube scandal of a couple of years past. There was jihadist videos, that advertisers were showing up next to, or obviously you have a lot of hate speech and other types of things. So I think the opportunity goes back to what we were talking about earlier with the identity transition, which is that we now have an opportunity to bring identity into the open web because cookies and the Apple IDFA are going away. And so now we will have, for the first time ever, I think, scaled identity with professional brand safe content, from Economic Times and Wall Street Journal and the like, in the open web. And I think that will be a huge positive game changer for the open web. And, we are absolutely angling to be a leading platform provider in that kind of, future environment.
And I might add that your identity is better than their identity says who you are. The identity that you are going to be able to provide is what are you doing today? Did you buy a car yesterday? You could get information to that kind of a level. So the identity that you provide is really a much more broader identity, not just who you are, but what you are doing today.
Yeah, I think that's right. I mean, the scale of the content of the open web in aggregate is the scale and the breadth of it is much greater than you have inside of the walled gardens, right? I mean, if you think about, something like Facebook, it's really a utility for one or two different things, right? Catching up on what your friends are up to and, maybe messaging and communication. But it's not, terribly relevant beyond that. So the scale of the open web, scale of the open internet is much broader.
Somebody has questioned about their ESOPs or whatever. Yeah, I would, Ashish, I would just advise you to contact the HR folks at PubMatic, and we'll take care of it if there is any
great
issue. I have a kind of maybe a different kind of a question. Maybe it really relates to what you have said. I think one thing you have said, many times, is the effort you have put in building the right culture at PubMatic. And maybe you can talk about what do you really mean by the culture, and what have you done, and how you kind of think about it every day.
Yeah, at PubMatic, we take culture, very seriously, and we're proud that we've now been certified as a great place to work across offices in 3 continents, right? And Great Place to Work, for people that don't know, they are a kind of independent analyst, third party. They survey all of your employees, and then they look at all the survey results and they compare you, to other companies. And you have to be in kind of a top percentile in that classification. So I think, the culture that we try to have is one of openness, innovation, and problem solving, and doing it in a way where we're always, pushing ourselves to achieve more. And I think one of the keys to that culture is 2 things. One is having the best possible employee experience, and then second, being very transparent. So in terms of, employee experience, the way I think about that is, when you if you work at PubMatic, when you wake up in the morning, I want you to be excited about going to work, right? Whether it's from your home office or actually in an office. And the reason being that, you should be excited because you're working on interesting problems, you're working with interesting people, you see that you have an ability to, meet the needs of your customers and make them, happy customers of PubMatic. And if we can figure out ways to do that, and the things that we need to do that are always changing. But if we can figure out how to make that employee experience great, then we know that people are going to stay and people are going to enjoy their time at PubMatic, and they're going to give 110% of their effort. So it's really, I think, on all of the people managers, all of the leaders inside of the company to, keep defining and redefining and keep pushing the boundaries in terms of, what makes a great employee experience. And one of the things that's easy to do is just ask your employees, right? So we run surveys all the time to try to figure out, what are the problem areas. So we discovered, for instance, in the wake of the pandemic, many of our younger employees in India, right, our engineers, they're struggling with power and internet connectivity, right? And so, we take that for granted in the US that, okay, you have an internet connection and it's reliable and it works. But a lot of our, younger engineers, maybe they have less financial resources of their own. They don't have, multiple internet connections and, reliable power. And so we set up a program where, they could just let us know over Slack, and we would ship them, a set of batteries and give them a backup broadband card. And so, that probably cost us something like $75 per employee, for a couple hundred people. But the quality of experience that they have, right, and the joy that they have in, being able to do their jobs, they need access to servers and other things to write their code, is really high. So the other one I talked about is transparency. And, we've made a radical shift over the years to be as transparent as possible. And I'll give you a kind of an anecdote around that. Roughly, maybe it was 5 years ago, 6 years ago now, maybe, we had a period of time, maybe a year, where we were not performing well. And so that, culminated in layoffs. And obviously that was a, very painful experience for the whole company. And I was, very surprised to learn in the wake of that experience that many employees, they didn't know that we were doing poorly. And, we share in our quarterly all hands, the revenue, forecast, projections, how we're doing, all of these types of things. But, despite that, right, people don't necessarily internalize the information, or, maybe we were presenting it in a confusing way. And so afterwards, I vowed that, that should not happen again. And so I, personally designed a daily email that goes out to all of our employees. And that daily email shows them, globally and in every region and for every product line, how we are doing against our revenue goals. So it shows them, how did we do yesterday? What's the roll up for the quarter? What is our forecast, and what's the % achievement against our plan? So now everybody knows every day exactly how we're doing. And they know if we're behind, and everybody's got to work a little bit, extra hard to close the gap, or they know that, okay, if we're ahead, then they can shift their mindset to looking, 1 to 2 quarters ahead, which is a great position, to be in. And so we've, that's just one example, but we've really focused on having a maximum level of transparency so that, everybody knows, what's happening. Another example of that is in our all hands meetings, we get questions, live questions, write-in questions. And I answer every question that comes in, no matter how big or how small. We don't always have time for me to answer them live, but I'll answer it in Slack or, some other written format afterwards. And the reason I do that is I want to encourage people to ask as many questions, as they want to ask. I don't want people to feel like, there's certain questions that it's okay for them to ask and certain questions that they should never ask. So by answering every question, we encourage a maximum number of questions coming in. And just by doing that, I think that, increases the experience, for every employee, and, leads to a really strong culture.
And how does that change with the IPO now that you can't share your daily revenue numbers with employees? And What happened in the last 3 months?
Yeah, well, in fact, I decided I didn't want to change any of those things. So we made every employee an insider, and we haven't changed any of those practices. So, we still share the daily revenue report. All of our employees know exactly where we are. And, that was something that was important to me, is that going public should not change our culture, for the sake of going public. Right. And so we decided, hey, we'll classify every employee as an insider, which simply means, they can only trade the stock, during an open window. And I think that's a worthwhile trade-off. But that's allowed us to continue to be, as transparent as we were before. And I remind everybody now. It used to be I reminded everybody that, hey, we're about to share a lot of confidential information. Keep it inside our four walls. And now I have to remind them that, the penalty for sharing the confidential information, now there's legal ramifications. So it's very important that people respect that. But we have not had an information leak, in the 6 years since we adopted this approach. So I don't expect that we will going forward either.
And Rajeev, you are one of the few companies, maybe only a handful of companies, private companies, that published a diversity report. You share with everybody, how we want to include everybody in PubMatic success. Can you talk about that? What led you to doing that, and how can other companies adopt this practice?
Yeah, so we started publishing this diversity and inclusion report, I think it's 4 or 5 years ago. So before the events, let's say, of the last 12 to 18 months, where obviously this topic has come to the forefront even more so. And the reason we decided to do it is that it's hard to create change in some of these areas if you aren't measuring and holding yourself accountable. And we've all, I think, heard from many companies, large or small, where they set goals that are 5-7 years out. We want to have this percentage of people, females or minorities in different roles. And the problem with that is that 5 to 7 years out, there's no accountability, right? It's easy to say, well, there'll probably be, for a public company, there may very well be a new CEO between now and then. There certainly will be a different VP of HR and whatnot. And so you can just I think do window dressing without really solving the problems. So we said, okay, we're going to try to own the problem, and the best way to own it is to share the data and identify the biggest challenges that we have. And then also, by the way, be careful to say, look, we can't solve all of these problems. We've got to pick 2 or 3 in any given year, and then let's solve those problems. So in the first year, one of the things the report showed is that we didn't hire a single female engineer in that year of data that was in the report in India. And we must have hired something like 50 engineers, and we didn't hire a single female engineer. Okay, so that's pretty bad information and pretty embarrassing. So then we started to look into, okay, well, why did we not hire any female engineers? And we discovered a variety of different issues, right? There's unconscious bias. Almost all of our engineers were male, and so you hire people that look like you and kind of think like you and speak like you, and so they had a bias towards perhaps hiring only male engineers. We found that there was an expectation that, okay, if we have a female engineers, if they work late, we have to provide transportation home for their safety, and managers didn't want to ask for the money that would be needed to provide the transportation home, right? And so sitting here in Silicon Valley, I would have never thought that was an issue. Nobody ever raised that up, but these were the barriers. And so by publishing the report and then setting ourselves goals, we were able to fix these issues, right? And so we started recruiting at some women-only universities. We did, unconscious bias training. We created a budget, for, transportation and other things. And these are small things, right? That budget's probably, something like $5,000 a year, which is, not a big number in the grand scheme of things. So there were very tactical steps we could take to solve these problems. And so I think that's an important part of, goes back to our employee experience, making improvements year in and year out, not on everything, but on a number of things that, over the course of time will lead to significant improvement.
And Rajeev, we have some of the lowest employee turnovers. Is that what do you account for that? Is the culture, is it the practices, or how do you think about that?
Yeah, I think it is the culture, and you're right. I mean, our attrition rates are in the single-digit percentages. So very low attrition. The industry standard in our sector is around 20%. So we're at about a third of that level, and I think it is due to really the transparency and the culture around being inclusive, sharing maximum information. And defining success, as the company's success. And, I learned, maybe 6 or 7 years ago, we had a period where we had great company performance. Our financials were fantastic. We were growing revenue and growing profitability, and we still had high attrition. And, at the time, it struck me as odd that, hey, how could the company be doing so well, but yet people, are not having a good experience and they're leaving? And then obviously the realization was that the company's, success doesn't directly translate to the employee feeling a part of it unless you go through the process and the steps to make the employees part of it, right? And so you have to show them how the company's success leads to their success, how they own, a portion of that success. So you have to put in that effort, to tie the employee into the greater mission of the company.
Yeah, so that's very insightful. I mean, the employees need to feel connected to the company, and there's one question that the question about data. Are the owners of data going to own the ad tech ecosystem? I guess you can say Google and Facebook are owners of data. From Sumit.
Yeah. Yeah, I think in some ways the answer is yes, but that actually only increases the opportunity for somebody like us, right? So the owners of data, they have great data, but they don't have the machinery to, act on that data, typically in the advertising domain, right? In the advertising domain, we have a high degree of specialization, right? Transactions have to be processed in real time, 100 to 150 milliseconds, right? So we're talking about, the blink of an eye. Huge amounts of data are generated for each ad. We're processing hundreds of billions on a daily basis, and that volume is only going to grow. So the businesses that people are in that lead to them owning data, it could be financial services companies, it could be retail companies, it could be supply chain logistics companies. They're not in this business of how do they translate that data into, actionable capabilities for advertising. They're in a totally different business. And so they need, great partners, whether it's us or others, who can help them create value from that data. And so that's exactly the business that we're in. We don't own media properties. We don't have, targets of consumers that we're trying to acquire. We don't own ad budgets, but what we do is create great infrastructure that facilitates the owners of those ad budgets, to connect with the content creators, with the media companies, to spend those budgets. And I think that as the digitization of the economy goes on and more, behavior moves online, the opportunities around that are only going to grow.
So Rajeev, we are approaching 9 p.m. in San Francisco. Do you have any closing comments, thoughts for many entrepreneurs and even for us investors? How we investors can be better partners for companies, and how companies each entrepreneur, each employee can realize their dreams?
Yeah, absolutely. So for investors, I would say, and I think you proved this with your investment in PubMatic, you have to have your own courage and conviction around, what is going to be a successful segment or opportunity 5 or 10 years down the road, right? And I think a lot of VCs, they use what's fashionable today to make decisions about, what will be successful in a half a decade or a decade from now, right? Which, there's a clear disconnect behind that. So, I think you deserve a lot of credit. Advertising, years ago was never really a hot category, but I think you saw the need for, how infrastructure, how data, how automation, can lead to a very successful company. And, obviously that melded with our vision. So, I think VCs, can learn from that. I think from an entrepreneur perspective, I think probably the number one lesson to take away from PubMatic is around perseverance, right? So, part of our success is that we didn't give up, I think, when other entrepreneurs and other companies did. And so in some ways, the success that we have is from, winning a battle of attrition, where, we kept seeing more opportunity, with the growth of the internet and the growth of the advertising opportunity. And we believed that at some point, the breaks would come our way. And, that's kind of exactly what happened. So to all the entrepreneurs, I would say, stick with it and persevere. Make sure you listen to your customers to make sure you're focusing on the right things, but persevere along the way. And then the last thing I want to do is just, thank all of my co-founders and all of the great team at PubMatic, Mukul, who some of you know, and Pune, Anand, our co-founder and CTO for many years, and Amar, and then all of the great team of about 550 people that we have at PubMatic that have led us to this point and are excited for the next phase of the journey. So thank you for your time, and thank you to the audience.
Yeah, thank you very much, Rajeev. Very insightful discussion coming direct from the heart and very authentic as well. And thank you very much for everybody for joining us today. All right. Good night and good morning.